Once flush with investor funds, India's startups are struggling. Investors once eager to pump in billions of dollars in promising Indian tech ventures are now going slow and cutting smaller checks. The reason? The several controversies surrounding top startups like Paytm and Byjus. Both startups are facing regulatory scrutiny, leading to a sharp dip in their valuations and weakening investor confidence. Indian venture capital firm Bloom Ventures is an example of falling investor enthusiasm. The company, which has invested in hundreds of young startups, is expected to complete about 8 deals this year, compared to 12 in 2023. A Reuters report suggests that the company will invest bigger sums in firms that could achieve profitability. Reports indicate that investors are now less enamored with tech firms and more interested in stable brick-and-mortar businesses. Data shows that India's startups have raised about $900 million this year. This signals yet another slow year after a 6-year low of just $8 billion in 2023. That's a far cry from the record $36 billion raised in 2021 or even the $24 billion in 2022. Less startup funding can have a broader economic impact as well. A recent report shows that startups generated 20 to 25% of India's new jobs and 10 to 15% of its economic growth in the last 8 years. While startups have been struggling for funds, India's stock market and the economy has been doing well. The country's stock market has surged 19% since the beginning of last year, hitting a record high this month. On the other hand, India's economy is expected to grow by 7.6% this year, while remaining the fastest growing large economy in the world. For all the latest news, download the WION app and subscribe to our YouTube channel.